What's up, everyone? We have yet another filing to talk about. This one's out of SR-Phlx, which is the NASDAQ PHLX 2022-17. This is to amend Equity 4 Rule 3306A3 in light of planned changes to the system. Now, this was filed on April 21st. It is scheduled to be published on the Fed Register on 4/27. And this is a notice of filing and immediate effectiveness of proposed rule change to amend Equity 4 Rule 3306A3 in light of planned changes to the system as well as to address existing issues. Now, the purpose of this, presently the exchange is making functional enhancements and improvements to specific order types and order attributes that are currently only available via the Rash Order Entry Protocol. Specifically, the exchange will be upgrading the logic and implementation of these order types and order attributes so that these features are more streamlined across the exchange's system and order entry protocols, and will enable the exchange to process these orders more quickly and efficiently. Additionally, this system upgrade will pave the way for the exchange to enhance the OUCH order entry protocol so that participants may enter such order types and order attributes via OUCH in addition to the Rash Order Entry Protocol. Don't worry, I'm going to explain what all this is in a second. The exchange plans to implement its enhancement of the OUCH protocol sequentially by order type and order attribute. Okay, so we have a few supernotes to talk about here. So supernote 3, an order type is a standardized set of instructions associated with an order that define how it will behave with respect to pricing, execution, and or posting to the exchange book when submitted to the exchange. Supernote 4, an order attribute is a further set of variable instructions that may be associated with an order to further define how it will behave with respect to pricing, execution, and or posting to the exchange book when submitted to the exchange. Supernote 5, the RASH, which stands for Routing and Special Handling, Order Entry Protocol, is a proprietary protocol that allows member organizations to enter orders, cancel existing orders, and receive executions. Rash allows participants to use advanced functionality, including discretion, random reserve, pegging, and routing. Supernote 6, the OUCH Order Entry Protocol is a proprietary protocol that allows subscribers to quickly enter orders into the system and receive executions. OUCH accepts limit orders from member organizations, and if there are matching orders, they will execute. Non-matching orders are added to the limit order book, a database of available limit orders, where they are matched in price time priority. OUCH only provides a method for member organizations to send orders and receive status updates on those orders. Then we have Supernote 7. The exchange designed the OUCH protocol to enable member organizations to enter orders quickly into the system. As such, the exchange developed OUCH with simplicity in mind, and it therefore lacks more complex order handling capabilities. By contrast, the exchange specifically designed Rash to support advanced functionality, including discretion, random reserve, pegging, and routing. Once the system upgrades occur, then the exchange intends to propose further changes to its rules to permit participants to utilize OUCH, in addition to Rash, to enter order types that require advanced functionality. Now the changes. Going forward, planned upgrades will provide for the exchange to process partial cancellations of all order types and attributes entered through all of its order entry protocols, including Rash, OUCH, Fix, and Flight, and it will do so without loss of priority, such that the existing exception to the general rule in 3306A3 will no longer be necessary. Thus, the exchange proposes to eliminate this exception by deleting it from the rule. This proposal will provide better outcomes to participants by enabling them to reduce the share size of their orders without the need to sacrifice the priority of their orders. So the current problem is they are currently sacrificing their orders, or the priority, when they're reducing their share size. We all know that institutions are loaded up on shares right now, so they probably need to keep them as collateral. So this is a way and a design to help that. Now, the reasoning behind this, the exchange believes that it is reasonable to allow the partial cancellation of an order without the order losing priority because the participant that entered the order continues to express its willingness to trade at the price entered when the order first came onto the book. Moreover, if the order is displayed, other participants quoting at the same price are aware of the priority of their orders relative to the partially canceled order. While a partial cancellation may provide these other participants with greater opportunities to provide a fill, the exchange does not believe that it would be reasonable for these participants to jump ahead of an order with same priority merely because the size of the order has been reduced. Similarly, if the partially canceled order is non-displayed, other participants would have no awareness of its price, its original size, or its reduced size. While other participants at that price may have an increased opportunity to provide a fill when the order size is reduced, they would not have an expectation that the priority of their orders would change vis-a-vis that of an order that arrived in the book at an earlier time. So what does all this mean? Well, it's going to be implemented during the second quarter of 2022. That's the quarter that we're in right now. The exchange will issue an equity trader alert at least 7 days in advance of implementing these changes. So in essence, basically, the exchange is eliminating the exception to the general rule providing for the exchange to process partial cancellations without loss of priority will benefit the participants by enabling them to reduce the share size of their orders, again, without losing that time priority. The exchange does not believe that it would be reasonable for these participants to jump ahead of an order with time priority merely because of the size of the order has been reduced. Similarly, if the partially canceled order is non-displayed, other participants would have no awareness of its price, its original size, or its reduced size. In other words, the exchange processes partial cancellations for midpoint pegging orders without loss of priority. The exchange recognizes that this rule text does not specifically address orders with midpoint pegging, and again, the proposed rule change will eliminate this issue going forward because the exchange will adopt consistent handling of partial cancellations across all orders and applicable and available order entry protocols. So basically, can reduce share size without losing time priority. And that's all there is to it. Have a good one.